Hey everybody. First, a thank you, as you can see from my virtual post-it here, for the ad clicks. The ad revenue has been good and strong lately. I always appreciate that. Where does all that money go? I'm actually writing some big checks right now to fund some new development, and you're going to start to see the fruits of that over the next month and also 2 months. Some pretty big, cool stuff coming from Slope of Hope. So your donations and your ad clicks make that possible. So thank you. I appreciate it. And I think you will like what you see. This morning, I tongue-in-cheek put this comment up saying, just make sure I understand, we start off lower to get up bearish hopes. We make the low of day early in the morning. We soar from there. Do I finally have this right? And I said that kind of hoping that I would be wrong, but I was absolutely right. That's exactly what happened. That's exactly what happened today. I woke up, ES was down 4, which was surprising considering the incredible news from Apple yesterday. The euro was down. And sure enough, half an hour into the market day, that was the low. And we did a 15-point reversal on the ES. And all the bears got machetes in their throats. So, yeah, day after day after day, same thing as outlined here. So you got it. That's how it goes. And so this has been the year. Up every day. White candle every day. Every stinking day. I didn't come into the day totally short, as you know. I was long DRN, which closed up 3.67 on the day, and also so-called junk JNK, which pushed up about almost 1%. But anyway, still another bad day for the bears. Another bad day for the bears. The NQ, of course, thanks to Apple, had a sensational day. And Apple itself, even though we got a black candle here because all the excitement at the beginning of the day caused people to pay top dollar for this thing, still up over 6%, new lifetime high for Apple, biggest market capitalization in the world, I guess, at this point. So Steve Jobs, wherever you are, somewhere up in the iCloud of heaven, congratulations. Your spirit and your strength live on. Now, wanted to talk a bit start with a little anecdote about stop loss orders. This was a pisser, my friends. I was short FII, and you can already tell what I'm going to talk about here. Yes, is this spike right here, but let me just back up a sec. So late last year, I really got sick and tired of having goofy stop losses happen at the opening bell, because you'd get these crazy, nasty, scummy executions from time to time at the opening bell, and they would look kind of like this. This isn't the opening, by the way, but we'll get to that. But just basically rip-offs, and I got sick of it. And so every single day this year, I have, I always wake up ungodly early, much earlier than I need to or I want to. I cancel all my stops, and one by one, I reset them. That has some amount of risk with it because it takes time to go through all these positions. And by the time I get around to setting a stop, I may well realize, oh my God, I don't want to be in this position anymore. But that's the price I pay for the security of knowing that there's no frickin' way that at that opening bell something bizarre is going to happen. So good for me. However, as we approach the Fed announcement today, I was thinking to myself, I wonder if I should do the same thing with the Fed that I do with mornings. Should I cancel everything and just reset them one by one? And I told myself, no, because if we start to move firmly in one direction, you really got to have those stops in place. So just don't touch them. So I didn't touch them. And on the whole, that was the right decision. However, this symbol, FII, I had a stop set probably just above here. I don't remember the exact level. But in the span of this, I can only get down to minute by minute level. I can't get tick by tick. But after the announcement, just for moments, the prices shot up here and came back down again. Now, so on the day, I came into the day short this stock. The stock fell for this day, but I took a loss on this sucker. Why? Because I got stopped out here. And I grabbed at my broker, and they basically said the rules are, unless something is 10% away from the prior trading, they're not even allowed to file a complaint to see if they can bust it. So I don't know why this happened, how it happened, et cetera, et cetera. I don't know who or why decided it would be a great idea to buy a ton of stock at those levels. But my short got covered. We're only talking about a few $100 in the grand scheme of things. It's not gigantic, but boy, it bothers me. So I just want to offer this as a cautionary tale. I know some of you think stops are for idiots. Instances like this, I think, would only affirm that notion. I certainly don't believe that, but it's irksome to me that now that I've eliminated the prospect of getting stopped out at the opening bell, now I've got to worry about announcements like this. Well, that's the cost of doing business, I suppose. These things do happen. It's a shame, but my little lesson for you. Okay, let us look at a few items here. T and X, the interest rates, fell for the day because our good friends at the Fed, I guess, made it very clear that they were going to be really, really good buyers of government debt for years to come. And the bonds, strangely, even though equities were up like mad, bonds were up too. And so they're starting to kind of decouple this inverse relationship they have with equities. From a charting perspective, it's mildly interesting to note that today's high was still on the underside of that broken trend line. There is no clear pattern at this point on bonds. We have been stuck in this trading range more or less since November 1. So I'm not doing anything with them. But it's just interesting to me that bonds firmed up today in the face of a pretty big equity rally. As far as the euro goes, this had a big reversal today. The announcement instantly goosed the euro higher. I continue to hold this up as my favorite short idea of the year. I came into the day short FXC. I covered at a tiny profit this morning. I re-entered the short late today. I've got a probably equally sized loss in it right now, so kind of, no change for the day on this. But I am willing to hold this short up into this trend line. If it crosses this trend line, then that's enough damage for me to just back away. But I continue to like euro as a short. I like it even better now that we have pushed well away from those depressed levels of January 15. I know that the short interest, the COT, I guess, in this is pretty substantial. I don't know how much that's been covered to date, given the rally, but I'm basing this on the chart and the analog. Now, as I mentioned earlier, a couple of longs turned out nicely. So here's DRN. The first target for this, I suppose, would be probably this trend line. I mean, this horizontal line, not especially significant. If you really took this at face value of saying, well, this is inverted head and shoulders, so what's the measured move going to be? It would literally be up into the 80s. It would be just an ungodly huge move. That's fine. I will point out, though, that this pattern is awfully similar to this pattern here. If I can draw this live. And that pattern did break out, and a day or two later just fell absolutely to pieces. Now, ultimately, it went a hell of a lot higher. So, for those with the stomach, they did sensationally well in this trade. But it did not push past resistance and whistle its merry way up into the 80s. It had a rough time for a while there. So just kind of an FYI on that. And then J&K, as I mentioned, looks, particularly since it's not leveraged, seems to be a more conservative play. Now, I don't. I had a short on Netflix last week. I covered it for profit. I didn't want to hold on to it into the earnings, and happily, I don't because it's up almost 12% after hours right now. It's trading, I guess, even above this former high set back earlier this month. So big push higher for Netflix, just in case you didn't know. Let's look at a few indexes. IndieX, a new high, the highest level it's been for, it goes off the chart. I mean, I've got a 10-year chart here. Obviously, if we go back 20 years, then we'll get to these, bubble highs. But suffice it to say, we are at the highest level we've seen since 2001. So an incredible rally on the IndieX, and I don't have any great reason to say, and it's going to start turning down because of this and such. I will say that this line here represents some level of resistance, scant as it is. It would not take much at all for it to just flick that right away. But we've had 3 touch points here on this ascending trend line. If we started reversing tomorrow, we could reverse very substantially and still be absolutely intact for a bull run on this. We could fall all the way down to like 2380 or so and not break the bullish pattern here. So it actually might be kind of healthy for this to sink somewhat lower. The Russell up almost a full percent today, starting to approach that arc. Again, the arc kind of goes away when I zoom into it. Well, it resets itself, unfortunately, but pretty lofty on the Russell right here. So again, wouldn't be too shocked. We've got a lot of economic news coming out in the morning, so that might provide some reason for some profit taking. And XBD over in broker-dealer land, very interesting that this was actually down today. Very interesting. This was softer. I would point out again this line, it's 97.35 as important resistance. Perhaps we've double topped. Who knows? That's kind of this level I'm watching, and then setting that aside, the underside of this trend line, which puts us around 102 or so. Let's finish with precious metals. Our good friend GDX was cruel mistress today. I did I think 1 or 2 day trades. I don't recall the results. If there was a loss, it was a small one. I did not hold on through this almost 7% rally. That would have been horrific. I am watching for, let's look at GDX itself. This is HUI. I'm watching this gap right here for closure at 5692. These gaps aren't that important, though. I would point out with gold, GLD, this gap, I've already removed the line because this gap was closed in short order. So the next level I'm looking at are the convergence of these 2 trend lines right here. Here and here, we get kind of an apex going on way up here at around 170, close to that. So if Euro does start kind of moving back down as it had done so reliably earlier, clearly gold and GDX even more so could be very, very enticing shorts. I don't have a position in either one of them right now. Today's rally was just, sensational in those. Added to which gold here, as you can see, broke above this descending trend line. So that kind of speaks to the strength of gold as the US dollar continues to get obliterated, as we can see here with UUP, some softness there. What might have been a very handsome escape from this cup with handle pattern here has been really kind of punched in the mouth, and we're back down here in the 22 level. So we are now, as I'm talking, pretty much unchanged on the ES. Just between Apple and the Fed, everybody's just taking a breather at this point. But if we start the day lower tomorrow, I guess we can expect more of the same. It's going to be kind of a cruel joke. Anyway, that is it from me, and I will see you Thursday. And look on the bright side. at least the announcement's over. So we got that. Bye.